Wendy de la Rosa and Brittney Riley. Come on up to the stage. Just wait. Yeah.
All right. Can y'all hear me? Awesome. Thank you so much for being here right before lunch, I believe. So thanks for hanging in there. My name is Brittney Riley. I'm a co-founder of Female Founder School. I also am on the direct investment team at Pivotal Ventures. And we're here to talk to you all today about the new face of financial technology, which might be a little bit of a change from the talks you've been hearing today. So we're very excited. And I think I speak for all of us on the stage when I say it's imperative that the financial technology sector becomes more inclusive and serves the needs of everyday people rather than exploit them. So we're going to all talk a little bit today about the ways that these three women are addressing those challenges, both from on-the-ground startups in the US and internationally, as well as kind of from a bird's-eye view and working with startups all around the world. And so to kick things off, I think if each of you could introduce yourself and tell us a little bit about what you're working on in Fintech.
Thank you so much for being here, and thank you for having us. So my name is Yuliya Tarasava, and I'm a co-founder and CEO of a company called C-Note. C-Note's mission is to close the gap in the wealth in the United States through financial innovation. And the way we do that is we allow everyone to invest in their communities, to underserved communities in the United States. It's a very simple process. It's 3 steps, no minimum, no fees, and everyone can do that.
Great. Well, hello, everybody. My name is Wendy de la Rosa. I'm the co-founder and principal of Common Sense Lab. We use behavioral science and psychology to partner with fintech companies, credit unions, local governments to create, but most importantly, test new fintech products that help low and moderate income individuals make better financial decisions. So that our press release is not just, hey, here's what we launched. Our press releases tend to be, hey, here's what we launched, and here's the impact that we had because we tested it through a randomized control trial.
Great. My name is Kfir. I'm the co-founder and chief product officer of Fido Solutions. It's a financial technology company that's using alternative risk analysis in developing countries to close the credit gap. So oftentimes in countries, financial institutions are not able to serve undocumented, underbanked, and unbanked people through credit means. So we are coming to countries using new mobile technology and alternative risk services to close that gap.
Awesome, thank you. And so I thought often when we first think of financial inclusion, a lot of people think of the unbanked or getting people bank accounts as a solution, as a way to address financial technology or financial inclusion. But there's actually a myriad of ways that the industry is exclusive. And so I'd love for you each to share a way in which either you or your customer that you serve has experienced an exclusive industry.
Yeah, absolutely. So when we started C-Note, it's been almost 3 years ago, we really wanted to create a product, financial product that serves all. And from my experience in the traditional financial space and experience of my co-founder, we realized that very often, or more often than not, women actually feel very underserved by financial services. There's a lot of research out there that shows that, I think 80% of women, when they're asked, they say that financial products and services are not created for me. And many women, if they go through some unforeseen events, either they become a widow or they get divorced, they actually, kind of like close that stage. They fire their financial advisor and they don't want to have to do anything with, when it comes to financial services. And so that was like a big, aha for us. If women feel, like they're underserved and, they don't invest, think about all the gaps that, by the time they get to retirement, they just don't have really money to retire. And so we kind of started thinking from that perspective. And so when we actually created C-Note, we spent a lot of time with women, interviewing women, really asking them a question, if we had to create a financial product for you, what that product would look like. And then we gather all the insight and we build, what C-Note looks like right now. And it's not only from kind of like a product development perspective, what return should be, what risk should be, what liquidity should be, but it's also just from UX experience, right? Like, should I invest in this using a brokerage account, or should invest of it outside a brokerage account, or outside of a Charles Schwab or Merrill Lynch, or kind of like some more traditional big financial institution that we keep hearing names of.
Well, when we think about financial inclusion, we actually have the hypothesis that most financial products are financially exclusive because they're building products for an individual rather than the household. So how many of you are married or share finances in any way? Raise your hand. Okay. All right, so almost 50%. And when you go to a traditional bank, right, you open up a bank account just on your name. There aren't really any products that are helping you to manage your finances from a household perspective because you're not necessarily the only one thinking about your retirement as you and your spouse. Additionally, we think that most financial products aren't necessarily thinking about the average American. So how many of you get paid on a weekly or bi-weekly basis? Raise your hand. Okay, so we have non-voters. Let's not do that November 6th. That's okay, all right? But if you're like 70% of Americans, you got paid on a weekly or a bi-weekly basis. And the standard way of saving in the United States right now is that you go to your Wells Fargo or Bank of America and you say, okay, I'm going to transfer $100 every month on the 25th of the month into a savings account, right? Like that is the only way, most likely, that your bank will allow you to save. The problem is I'm not sure if I'm going to have $100 on my bank account every 25th of the month because I don't get paid on a monthly basis. And so we take a much broader view to say that most financial products aren't user-focused, and so by definition, they're financially exclusive.
When we think about financial inclusion in the countries where we operate, which is in sub-Saharan Africa and Southeast Asia especially, we're thinking about how each person is affected in their daily life by lack of access to financial services. Let's compare it a little bit to our experience here in the States. For example, if you're a renter, you're probably paying your rent once a month. Maybe you had a deposit with your landlord ahead of time. But if you're in, for example, Ghana, where we have a financial institution there that's providing credit, someone has to pay their rent up front 2 years in advance. Can you imagine the sum of money that requires to have? So it's the difference between saving up to pay your rent versus getting credit from your landlord to be able to pay once a month. Another example in your daily life is your mobile phone. Here in the States, it's highly likely that most of you in the audience have a postpaid plan. You're paying for the data and the phone usage that you have at the end of the month. In Ghana and in most of the countries, so with a similar demographic and financial access problem, they're paying prepaid. Like 98% of people there are paying for the credits ahead of time. And all of this is because of this lack of trust that financial institutions have in the individual. So the individual is the one that suffers here, where they're having to save rather than being able to use credit and perform the various tasks in their daily life. So with FIDO Solutions, what we came into the equation is talking about how are you affected in your daily life? Where is the lack of access to financial services and financial credit affecting you? And we chose to focus on a smaller credit size. So in amounts that are $50 up to $200, it can make a difference in your life if you're having an emergency situation where you can't pay school fees, if you can't make a payment to a medical institution because you're hospitalized for some reason. Places where you might have been able to have an overdraft facility here in the States, this is just not available in the countries where we operate.
Thank you. I think it's just incredible to hear all of the different ways that the financial system touches people's lives on a daily, weekly, monthly basis, and how that differs depending on who that person, household, or what country they live in, and how incredibly important it is to think about them, and the products that you build are going to look so differently if you do that. So you all have spent years developing products with the goal of driving inclusion, being kind of central to those products. So do you want to talk a little bit more about how you've done that effectively, and maybe share also a time maybe you failed at it?
Yeah, absolutely. So I already started sharing a little bit about how when we started C-Note, again, the idea was how can we bring more capital into underserved communities. And originally we thought, well, we're just going to do very traditional peer-to-peer lending platform, right? Like you guys have money, you want to support, your neighbor, or you want to support a small business in your community, and of course you're going to do that, right? Like we're all good human beings, and we all want to feel good about, our action and where our money is sleeping. Why not? And then, with the help of, smart people in the room, we really kind of like thought very carefully about us as we're not rational human beings. Like we're all driven by emotions and behaviors and, prior experiences. And very often, what's good for us, we just don't do that. And so how can we design a product that takes as much friction from, decision making, from, clicking many buttons, from going through, 10-step sign-up process, from really, encouraging us to make this decision and really feel good about that decision, and really fighting, which, when people ask me like, what is your competitor? I often say it's inertia, it's people's laziness, because that's kind of like what, at the end of the day, prevents us from, doing what's good for us, right? Either it's making a good financial decision, or going to the gym, or, making an extra step and go get a salad instead of, Taco Bell. And so that's what we really thought through when we were designing C-Note. And so, again, we started with peer-to-peer lending platform. We even built the prototype as a peer-to-peer lending platform, and then very quickly, kind of like scratch it off, and then build what we have right now. And again, based on the interviews, based on the feedback that we got from users, the way C-Note looks right now, it's very similar to what you know already, which is, probably most of you have a bank account, right? And you know how bank operates, and you know what's that kind of like registering process looks like. And so we really wanted to replicate what you already know to make that entry point as low as possible, and then just like add some nice features and something that again, from conversation with you, we felt like you wanted to see. And so for us, it's been we had like no minimums, we had no fees, again, because we keep hearing from people that I don't want to feel exclusive, like I don't want to feel like I can only invest in my community, so I can only make an impact with my people if I only had like $10,000 kind of like sitting around, which a lot of us don't. And so no minimum was very important to us. The same thing, no fees. Like again, we keep hearing how banks charge crazy fees, and there's all this fine print that we don't understand. Again, no fees was very important for us. Again, making sure that everyone has access to it. Like there's all these terms, accredited, not accredited investor. Like are you rich or not rich? Define that. So there's just like a lot of things that we really had to listen carefully to what our users say and make sure that we can actually implement it. And with technology, with product design, with some like legal requirements around it to make sure that that product is available the way it is right now.
So I'll start with a failure, because I think sometimes that's the hardest thing to admit. But when we started off Common Sense, I at least had this intuition that part of the reason why we don't see high levels of financial well-being in the United States is because people are lacking in financial education, right? If you just teach people how to save, then their savings accounts will go up. And as a researcher, I went back to the literature and realized that actually someone has already answered that question. And so John Lynch, Daniel Fernandez, and others over at the Center for Financial Decision Making at Boulder analyzed over 200 studies trying to look at the impact of financial education on financial behavior. So if I get us all in a room and I teach us the importance of saving and how to save, and I measure your savings account, what then happens? And what they found is that financial education accounts for just 0.1% of the variance in financial behaviors. So not zero, but very close to it, right? And when I read that, I had to take a step back, right? Because we had just created a center called Common Sense Lab, hoping to increase financial well-being. But it makes so much sense, because how many of us know that texting and driving is bad, that you shouldn't do it, right? And how many of us have done it at least once in the last 2 months? Okay. How many of us know what we need to do to lose weight? Right. How many of us know that we need to put in a little bit more effort? Right. And so, like, most of the time in financial well-being, education isn't the barrier. People understand that saving is good and spending is bad. People understand that a high credit score is good and a low credit score is bad. What we need to do now is sort of change the decision-making environment by which someone is in when they're making that decision. And so a lot of the work that we've done to sort of create inclusive products has been around decreasing some of those barriers. So for example, we partner with a company called Digit. They automatically take small amounts of money from your savings account, but they didn't have a tax savings product. So most Americans get a tax refund. On average, it's $3,000. It's a great time to save or to invest it in CNOT if you have the ability to do so. But we're not asked to do that. In fact, during tax season, our entire environment is set up to help us spend, right? Like every company is getting smarter, faster, and better at getting us to spend. So what we did was we asked people, even before tax season, to say, hey, you might get a tax refund. If you do, what percentage of it would you like to save? Because in the future, we're perfect. In the future, I'm going to save for retirement. In the future, I'm going to lose weight. In the future, I'm going to call my mother more, right? In the future, in my mind, I'm going to turn into Beyonce, right? Like that's what's going to happen to me. And so when we did that, we actually found that we were able to roughly double savings rates when compared to when we asked people to save at the time that they received their tax refund, right? And so everything we do is all about changing the decision-making environment and the timing and the framing of how we ask, how do you want to save? When do you want to save? Rather than just focusing so much on financial education.
How we've been going about designing an inclusive product is pretty similar process to Yuliya's taken with CNOT. It's pretty interesting. You can just cross-border apply the same kind of lessons about listening to users, being customer-centric, which means endless focus groups, endless studies, endless, we even would video record people on how they use their mobile devices, interview them at length. I can think of like thousands of names of people that I've spoken to in person, asking them very private details about their life. What do you think about money? Do you trust your bank? Why do you not save at a bank? How far do you walk to get to the bank? Who do you know that is the best with their money and why? All of these kinds of attitudes, really understanding what are the cultural norms and what are the perceptions about finances that maybe I don't understand, being a complete outsider to that. So that was the approach that we took in the very beginning of designing it, where before we ever built a business model, before we ever thought about hiring an engineer, it was all about understanding the people first, and then designing around that and iterating, very similar to like a human-centric design that we approach, which is pretty popular these days. On the failure side, there's so much more that could be done. And one of the most of the barriers that I see to growing my business and growing financial inclusion in developing countries is really structural, about infrastructure, about systems that are in place. It's just basic things like communications. It's about identity. Even just having a solid biometric identity can open doors. It's been a major push in countries like India with India Stack, but it's lacking in so much more of the world, where the majority of people don't have access or means to get a verifiable biometric identity. Other kinds of rails that we talk about, like payment systems or even a stable currency. If you don't have a stable like fiat currency, how do you have any belief that your bank is going to keep it for you, or that the government is not going to possess your savings? So a lot of these kind of barriers that are infrastructure that I'm not sure I'm able to address them with my credit product, but I make smart considerations about what kinds of providers do I use, what kind of identities do I take. If I have to ensure that I know who my customers are and I ask them for an ID, let me understand what are the dynamics of getting that ID. How much does it cost the person? What's the coverage in the country about who has those identifications? What process do they take? If they're missing fingerprints on their fingers because they're a farmer, is that going to prevent them from signing up for this ID? Even simple questions like this are so important to understand. So a lot of challenges, a lot of room to grow.
Awesome. Is there an example you have of a time your company kind of went against that, the structural challenges, and were you able to overcome it, or did you have to kind of change paths?
I'm going to continue to harp on identity because it's so fundamental to finance and the financial institutions. You have to know who your customer is. It's really basic requirements like in global best practices to prevent money laundering and counterterrorism and so on. So for example, if a typical bank account asks you for, I'm going to speak to like Ghana because that's the best example I have. In order to open a bank account, it used to be a requirement to show like a birth certificate. You have to show a tax identification if it's a small business that you have, which is like impossible to get. You have to have like multiple forms of ID. You need to come into the branch and discuss with the branch manager, all of these things. And maybe the government at the time thought this is the best way to prevent terrorism and to prevent money laundering. But I said, this is not possible. I can't use these kinds of systems because it excludes too many people from using my product if they need a bank account and they can't get a bank account. So we've taken alternative approaches to even identifying customers where I'm using actually selfies, for example, as facial recognition to compare to ID forms. A lot of the IDs you find were misproperly registered. The registrar in the north of Ghana was putting their own birth date instead of the person's birth date. So if you don't have a real birthday, you don't know what the person's birthday is, and they don't know their own birthday. They know they were born on Wednesday, but they don't know what year, what day of the month it was. We're using alternative ways to identify them. Tell me what your mother's name is. Let's do a selfie and do like multiple forms of image processing and verifications. And let's get creative, like find creative solutions around structural things that exist.
Great, thank you. So we've talked a little bit about what we've done and your experiences through that. I would love to chat a little bit about where we think the market is more going and what innovative, where either your companies or the broader market, how they're addressing solutions. So Wendy, if you'll kick us off because you work with so many startups, kind of what are you seeing change that's good or bad in the market and how people are thinking about financial inclusion differently?
Great question. So I think I'll note something that hasn't changed, and I'm sad that it hasn't changed. If you think about the innovation in the fintech space, it's mostly been around lending and credit measurement, right? How can I lend faster, better, and how can I identify risk in a much, much better way? Now, that's extremely important, as we just heard, but there hasn't been that much work on risk mitigation. So if you think about cars as an example, right, I can go around and measure each one of you to identify who's the best driver and who's the worst driver. Or I can ensure that everybody is mandated to wear a seatbelt and that we have a stoplight at every intersection and we have traffic lights, right? That's all about risk mitigation rather than risk measurement. And so that's where I think the focus should continue going, right? How do we mitigate people's financial challenges, right? Because the question is not ever if you encounter a financial expense that you can't cover, the question is always when. And so I've seen a lot of companies do many innovative things around that, but still not too many. Like Even, who's trying to sort of give you access to your money when you need it and then just repay them over time. We talked about how we're paid. November is a time where people are going to get an extra paycheck if they get paid on a weekly basis because there's 5 Fridays. What are we doing to help people actually save that extra paycheck that they're going to get in November? Right? No one is out there basically telling you, hey, there's 5 Fridays, what percentage of it would you like to save? Or let's use this money to set you up for when you'll need it in the future. We've done, for our part, at the point in which people take out a loan, whether it's a mortgage or auto loan, we, instead of using Roundup to help you save, which, it's very limited, right? You're just rounding up to the nearest dollar. We ask people, hey, you are just getting a loan, it's $237. Do you want to round that up to $250? And that extra money is going to go into a savings account that you can access anytime your car breaks down, right? And we get about a 40% opt-in rate on that because people already think about their budgets in round numbers. And so it's all about, I think, for us, this risk mitigation side rather than the risk measurement. It's not about building the best AI or machine learning mechanism to identify your level of risk to your individual core and your soul. It's not about that. I think it's about changing the environment.
So I love, we've kind of talked broadly, and sometimes, especially if you're not in the fintech sector, it can feel kind of overwhelming. I mean, fintech or financial industry is over 10% of the entire economy. So I would love to hear, and especially for the folks in the audience, what either they can do individually or what they can do at the companies that they work at to help make the financial system more inclusive. Do you want to start?
Sure. We think a lot about it, and again, kind of like going back to this, like what role I play versus, like the system has to make it easy for me to be good, with my financial decisions, or to just like to wait for someone to make the system really more inclusive. And I think there's this interesting concept where, if I ask you, like, you all heard story of, like C-Note, it could be Digit, it could be like, there's wonderful other companies out there that, at the end of the day, we all make you to be more financially healthy, to have their lives that you want to have, really think about money as a tool for change, and really think about that's something where you can really make a big difference in your life and in life of others. And, probably at some point, hopefully, you all get inspired. You're like, yeah, I want to be better. But then, life comes in, you get busy, I have to talk to my partner, and then, probably, maybe like one or two people in the room, after we all, disappear here, we might do something different, or maybe we might just continue with whatever we used to be doing, before we came to this room. And so for us, like we really realized this is like probably one of the biggest challenges to really, promote that inclusivity in that space. And so we really started thinking about, what kind of like bigger groups of people can be doing, right? So as an example, like if you are, an HR professional in a bigger company, can you think about what is the role of the company to make, financial lives of my people better? Or how do I make, 401ks or my payroll or something else that comes around like money decision? How can I think about this like financial inclusion concept as a part of that that strategy, and maybe offer to someone as a benefit, like to help them to be a better saver, to help them to pay down their loans faster, to help them to save for their kids' college and all that stuff. Again, because Wendy talks a lot about is like this whole like social pressure concept too. Is like if I want to be better, but I definitely want to be better if my friend is doing it. Like there's this like competition that comes in place, competition or accountability, right? You can also use someone as your accountability partner. If someone is doing it, well, like I also need to do that because like I don't want to, I don't want to be left behind. So I think I'll just like all encourage you, like don't think, oh, like I don't have time, I don't have money, I don't have that. I think we all have a role to play to make that world much more inclusive. And again, if you have a control, or if you have insight in a bigger company, again, really think about like what's the role of my company to help my my employees and my personnel to be better.
Okay, so I'll give you 3 things that I think you can do today. And because we're a behavior-focused lab, they're all going to be specific behaviors. So one of the things that we do at Common Sense, and it's, people can opt out if they want to, is for people who want to improve their financial well-being, we share out our expenses to the group for the last month and hold each other accountable, right? We all have a goal of saving, but there's this level of shame that potentially comes if you're not spending in the correct way, right? And if you're really committed to that, we essentially allow time in the mornings, like every other month, to do so. So you don't necessarily have to do that with your coworkers, but I think you need to schedule time with whoever it is important in your life to make sure that, one, you stop procrastinating on opening up a retirement account, checking what your 401k contribution is and what that looks like. And even if that means giving a day to your employees, that's called Financial Wellbeing Day, report back on what you've done. We actually did that at Common Sense. All right, we know that it's a pain to sign up for life insurance. We all need to do it. You don't have an excuse now. I'm giving you essentially a day to do that. Report back on what you've done. I think if we fundamentally care about the people sitting next to us, we would do that. I think the second, and Yuliya can't necessarily say this, but I will, We have to support businesses that are trying to help our communities. So CNO is only going to be successful if people like us, who have an additional level of income, invest through her platform or invest in companies that are trying to help our communities, right? I think we all go through conferences where we feel good and we're like, I love what you're doing, great, keep doing it. But if we don't actively support with our dollars, those opportunities are essentially going to go away. So if you have more than $500 in your savings account, one, you need to be getting better interest, like sign up for CNO. I know you can't do it, but I will for you. And the third, I think, is the most important one, which is if you have a birthday coming up, whether it's like you're 29 turning 30 or 39 turning 40, there's all of this research shows that divorce rates go up during that time, because if you think back to wherever, you feel like you need to have your life figured out. Oh, I'm 24 turning 25. What am I doing with my life? Or I'm 44 turning 45. What am I doing with my life? New Year's, we see the same level of motivation. And so right now, I would love if everybody, if you have a goal of just being a little bit more financially well, put a calendar invite on your phone for the day before your next birthday and allocate that time to do whatever it is that you need to do.
So we're actually at time.
I'm so sorry.
That's okay. I loved that. Whatever she said, do that. That was great.
And I second, check out CNO and invest in CNO. I think our goal was really to help others understand kind of the nuances and the complicated ways that the financial technology space is exclusive, and how you all and how other companies are making it more inclusive. So we hope that that's what you took away. And thank you all for sharing all of your thoughts. And we'll be over there if anyone wants to nerd out more on Fintech. Thank you. Thank you, guys.